Hello, everybody. Mike Postel, Postel's Podcast. Excited today to have a senior loan officer on to give her take on the industry. And for those that are interested in real estate, sit down and listen up. She is an expert in this area and an awesome human being. As you know, purchasing real estate, it requires a significant amount of capital, some more than others. So if you're going to be purchasing a home, commercial property, raw land like I've done in Idaho, you need some money. And that if you've got cash, then cash is king or queen. But if you need to go loan to cash to loan, or you straight up loan, and depending on the type of loan, then this person you want to definitely listen to and possibly work with. So let's no other than introduce Kristin Breen. How are you? I'm good, thank you. Thank you for coming on. And I think in my little intro there, I forgot to mention, I believe I've known you now for almost 10 years. Yeah. Almost?
Yeah, it's about that long now.
It's gone fast. I met Kristin when I used to work at a prior real estate agency, and she came on board as one of the senior, well, I guess you were the senior loan person there, right?
I think so.
And I just remember her being so personable, so friendly, so outgoing. And that goes a long way, especially when you're stressing out trying to do a real estate deal and keep things together with the buyer and the seller. And obviously the most important thing, the funding going through and escrow closing properly, more importantly on time or even earlier. So, and the property gets deeded over. So I want to touch upon, I guess, where you started out. I believe you're Orange County gal, right?
I am
Orange County.
Born and raised in Irvine, and now in Newport Beach.
Awesome. Okay, and so you live in Newport, and congratulations! I hear you're engaged.
Yes, it's very exciting. That happened a couple weeks ago.
Congrats! When is the big day?
We don't know yet.
Oh, you don't know? Okay. Hey, no worries.
Engagement. I'm happy that happened.
Oh, cool. And do we have that little rock on your finger?
Oh, we do. It's right here. It's really nice.
Oh, look at that. Wow. Look at you. That thing's awesome. Wow, congrats. Well, congrats. That's awesome. Your man is a lucky guy. So smart move on his part, I guess. So and anyway, so you grew up in Orange County, and where'd you go to high school?
Well, I was at Irvine High and actually Rancho Santa Margarita. I was at private school.
Oh, you did? Okay. So you graduated from there. Okay, cool. Mm-hmm. Yep. Very good school. And for those listening in wherever part of the country, world it may be, we are in Southern California, specifically right now, Newport Beach area. And so that's when we bring up Irvine or Newport Beach, Huntington Beach, Costa Mesa, Laguna, Newport Coast, etc. So that small little region of Orange County. So when you graduated high school, did you attend college? Was that not your thing? What I'm building a little thing here, which led you into then.
Yeah, I wasn't a fan of school, to be honest, but
Yeah.
I just wanted to go make money.
Right. I love it.
Said, we have other plans for you. You're definitely going to college. I said, okay. And so I did go. I actually didn't graduate college, but I did go to college. And I ended up deciding to go get my real estate license and get into real estate. So that's the first thing that I did, and realized that real estate was not my jam, but I knew I would be the loan side of the transaction. And so I got into the loan over 20 years ago.
20 years. Wow. Okay. Very cool. So pretty much right out of high school, was there a gap between when you graduated high school, maybe took some time off, traveled, or?
Well,
what?
I'm going to be 42, so there was some time.
Yeah, okay. Well, I wasn't angling for your age, by all means. 42, you look like you're 21. Shut up.
So, I got into mortgage, not knowing a lot about mortgage and not even knowing, what the word escrow and title meant at the time. I just knew that there was a function of somebody needing money to buy a home. And being on the other side of the transaction, knowing that people, showing people homes and then knowing they needed to get a mortgage, I kind of just had to learn what that other side of the business was. And I realized that I enjoyed the numbers and the creativity surrounding that piece of it and kind of putting all the pieces of the puzzle together to get somebody a mortgage. And there's nothing cookie cutter about a mortgage for the most part. And that just kind of stimulated my mind and really kind of kept me motivated and interested to learn more and to understand all the different aspects of the products and the types of things that you can do. And it's an ever-changing dynamic out there. So it's always kind of kept me on my toes. I like it. I enjoy it. It's been an interesting ride up, down, and in circles, but it's been good.
Right. Did you start at one of the big name companies? I mean, me as a realtor, I'm kind of in some other things I do. I'm kind of, I haven't delved too deep into your side of the thing.
No,
so
at the time, there was still something called the penny saver at the time.
Oh yes.
I looked in there actually for, there was none of this. It was like not the career builders. It was like literally I found an ad in the penny saver and I called it and I went to go interview with the mortgage company, and it was just a small little company in Mission Viejo. And I happened to take that job, and the gal running the shop was, about 10 years older than me, and she knew the business and she taught me, and I went to the bathroom and cried every other day, but I learned the business and kind of just jumped 2 feet in and really kind of got my teeth wet and figured out how to structure loans and how to talk to clients and know what was important and about credit and loan to value and people's debt to income ratio and all the important stuff you need to know.
Mm-hmm. Very good. All right. So that's good. So you kind of found somewhat of a mentor type that got your feet wet, so to speak, and you started learning and going through some growing pains. And was there some moments at time where you're like, oh my gosh, I don't know if I can do this. This is kind of gnarly.
Completely. Yeah. Anybody who's thinking about getting in the mortgage business, you really got to have some thick skin because it can definitely be rough. There's a lot of aspects as far as loans are concerned. Not only do you have to learn and understand guidelines and how interest rates work and the market and why certain things happen, but you also have to, on the other side, be a sales oriented type of person. And so you have to have 2 sides to your brain, almost the creative side and the number side and the detail oriented side. But then you also have to really be comfortable talking to people. So you kind of have to have those 2 dynamics, and that can be challenging, just learning both sides of that and functioning correctly in your everyday, work that you have to do. Mm-hmm.
Absolutely. You gotta be good at sales and have the personable skills, right? Communication.
Exactly. Yeah.
Otherwise, someone over
everything in your head. So there's 2 different sides of that.
Yes. And so so for those thinking of getting in as a loan officer, let alone a senior loan officer, did you have some sort of book of business, people to call upon? Did you just start dialing for dollars, so to speak, cold calling?
So at the beginning, I kind of started at that one mortgage company that I just mentioned. And then I moved on, talked to some title reps at the time that knew different job openings, and, everyone kind of gets to know you, right? And that you do a good job. And so they referred me to somebody else, and I ended up coming down to Newport Beach and working in Corona Del Mar for somebody. And in that process, I learned a lot about the business. And then I actually just decided to kind of start something on my own, not realizing how hard that could potentially be. But I had a very much of a passion for it. I think what I would tell somebody if they're coming into the business as just a new loan officer, you really have to be prepared to work 24/7, 7 days a week for probably several years. And I'm really not exaggerating. It's a tough business to get into, especially if you come into it with, no contacts, or maybe you do know some people, but that's not going to support your book of business. So you kind of have to figure out how to potentially get leads, or have somebody help you or mentor you or show you what you need to do. It's something that takes a lot of sacrifice, I would say. From a social aspect, you kind of have to almost be married to your job at the beginning of your career, but the reward is definitely there in the long run.
I agree with you 100%, just like real estate or when I used to be in the life insurance business. Oof, that was a
Absolutely.
tough one. But so how many years? So let me see, what time is it? So when you came aboard the company that we used to be at, when you came
Yeah.
aboard there, so you'd have been in the business probably 10 years?
Yeah. Yeah.
About that?
About that. Mhm. Yeah.
So now from our conversations of past, so you used to be at, I think, a company where you were doing loans and stuff, but it was more like telephone interaction, online, that kind of thing, email. And then you came into the fire personal, straight in front of people.
Yeah. I was doing a lot more behind the desk and phone calls. And that really was because I was a very refinance driven loan officer. And I worked for a fairly good sized mortgage company in Irvine. And a lot of it was internet leads. Like, we had a whole marketing campaign that we did and my team put together. We had a lot of people filling online loan applications out. And over the course of many years, that just turned into, a lot of referrals, of course, from those clients and whatnot. But it was very heavy phone and computer work, and not a lot of one-to-one interaction in front of somebody else. And then in August of 2013, I was given the opportunity to work at the company that you and I met at and become a loan officer that really worked more with real estate agents. And I had to learn another side of the business. I really hadn't done many purchase transactions before moving over and being a loan officer in a real estate company. And so that was a whole nother, I felt, almost business that I had to learn. And it was a lot. It was a lot to understand and a lot to kind of realize now I'm going to have to be a lot more social than I used to be. And, hang out and get to know people and figure out what their business model is and what kind of clients they have and what they need. And yeah, so it was just a very difficult transition, but I much, much, much prefer the social interaction, and I much prefer working with people and helping them buy homes. Of course, I still do refinances for people all the time, but it's really rewarding to get a new home buyer into a property, as I'm sure you would agree. They're so excited, and that's just something you can close out the end of the day and say, wow, I helped somebody get a house today. And I think that's a really awesome feeling.
Agreed 100%. It's a nice sense of accomplishment to help someone achieve their, real estate goals, whether you're a lender, you're an escrow, you're a title, which is part of it, or, the realtor. So, so now you mentioned refis versus the purchase side and loans.
Yeah.
Are you still doing, we've had some rates up and down for the last 6 months, bumping up and down between the low 3s and the high 2s, mid 2s. Right now, we're a little over 3s. There's maybe some, depending on the programs or in the client, so to speak, you could find a high 2. But Are you finding that the refis have then taken a little bit of a step back now and a breather, and you're doing more of the purchases?
So yeah, I would say in the last month, of course, rates have gone up about a half a point in the last 30 days or so. And that has shifted, there's not as many people looking to refinance, but interesting enough, I have done so many more purchases, just even in a heavy refinance market. Most of my business is purchase business. I do refinances when clients ask me to, or refer me a client or something like that. But my focus has really been in the last many years, really very much purchase driven book of business. But there's also refinances that occur from purchases, and it's not just because there could be a rate decrease, but there are so many unique, interesting programs out there. Like, I work with a lot of self-employed borrowers, especially being in Southern California. Sometimes they don't file enough income on their actual tax returns, and there's different types of bank statement programs they can utilize. And then they might refinance even the next year when their company starts making a little bit more money, or they're reporting a little bit more on their income taxes. And I can kind of help advise them and then getting them into a different type of program. And so people refinance out of those types of loans because the rates are a little bit higher. And that's another reason someone may refinance. But other than that, I have been doing quite a few purchases in the last few years.
Nice. Yeah. Or your loan term may come due to maturity, and then you have to think about what you're going to do, like our case, and we refied.
Yes. Yeah. Gotten a lot of phone calls. My 7-year arm is coming too. And what do I do? I
Mm-hmm.
need to finance. And so maybe they'll do another 7-year arm. And to your point, those rates are still very aggressive, high twos type of thing. So, there's still those low rates out there. The 30-year fix have increased, quite a bit.
Yes. And relatively speaking, still almost historically low compared to like the 80s, right? Or 90s. So,
you're going to get a 3.5% interest rate, and people mentally have to kind of digest that for a little bit because they were getting, 2.75 for a while, right?
mm-hmm.
So it's just a little bit of an adjustment. But I'll tell you something, Mike, it certainly hasn't affected the number of phone calls, the number of people that want to buy houses right now. I think our real problem is just not having enough inventory on the market.
Right. Absolutely. I agree. The demand is there for buying. It's just, unfortunately, inventory is historically low. I've sat in several meetings listening to the so-called experts, and they're all saying this is the lowest inventory in 30 plus years.
Yeah.
Easily. So,
absolutely. It's a very interesting dynamic. And all of the time I've been in the industry, I would say the last 30 days since the new year has been the most interesting because I have probably worked on about 32 qualifications and one person has gone into escrow. So it's the war out there right now.
Whoa. Oh, it's brutal. The competition.
Lots of competition. We've got, multiple offers, anything under, in our region of Southern California, anything under 1.5 million has, 10 plus offers, way over ask. Lots of cash is out there still. And that's very competitive, but that's not without clients trying. I mean, they're doing all the right things. They've been fully approved ahead of time. They're offering over the ask price. They're waiving appraisal contingencies. They're doing everything they can do, but yet still not getting the property. And so it's been a little rough out there in the last, I would say 30 days, even more so than it was at the end of the last quarter of the year.
Agreed. Last year, I was trying to get some buyers that had a nice portfolio that were doing well.
Yeah.
They lived over in East Bluff. They wanted to get a home on the peninsula because they both grew up in the ocean area, beach areas. We lost out on a deal. They were at list price. The other couple parties were below. Yeah. And then in comes this guy that just slams everybody. He goes $300K over list price.
Oh my gosh.
And so basically as you know, a lot of these list prices the last couple of years have almost been like an inadvertent auction where it's the initial bid price. Right. And you mentioned 1.5 or below. Yeah, it's absolutely crazy. Any property 1.5 and below. Yeah. 10, 20 different offers. It's crazy. Mm-hmm. And so anyways, we lost out on that. I'm just like, hey, sorry, it's a gnarly market. But it's unprecedented. So,
times. It's insane.
Yeah, it's frustrating because, you got people working their butts off and working all hard. And they're like, hey, I'm willing to offer you this house at full price. And I realized it was on the market 2 years ago and you were $400,000 lower.
Right.
And I'm willing to take that gap and get this property. And then comes a dude that's $300K over and you're just like, oh man, this effing sucks. But you just got to pick yourself back up and keep grinding.
That's right.
And so, folks, that's why you need to have someone like Kristin as part of your team, a network base, whether you're a realtor, you're working with a direct as a home buyer, because she is on it. She, as she mentioned earlier, works her butt off, but she enjoys what she does. There's a difference between working your butt off and hating your job and you seem like your life's miserable and you're not focused properly versus you are laser focused, sharp, and on it. As far as now, excuse me for my ignorance, but are you geographically confined to a certain area or the company you're with? No, you're not in a real estate company, right? You're at a lender, or where are you at?
Yeah. In fact, I'm going to tell you, we're actually in a few different states. I actually made myself a list here. I was going to mention to you what it was. Let me just take a look here. We're in California, Colorado, Florida, Georgia, Hawaii, Idaho, Nevada, Oregon, Texas, and Washington. And I actually do a fair amount of business in Texas, and I've traveled out there a few times this past year. Great.
Oh, that's what those photos were about on social media. Yeah. Okay. Cool.
But yeah, we do loans in many, many places. So.
Well, I like Idaho. As you know, we have our property we're working on in northern Idaho. So I'm probably going to get my realtor license in Idaho and kind of be a dual agent at some point. So we'll see how it goes. But wow, very cool. So going through this journey, now you're a senior loan advisor, if that's what we can say it, or officer.
I would hope so after 20 years.
My God. Yeah, no, totally. Have things, how's your mindset now? Because everything's, a lot of is mindset. So how is your mindset now as compared to, I pretty much can answer my own question, but to let the listeners, how is your mindset from when kind of like when you were kind of into it knee deep and now you're the gal on top and where you at?
I think that it takes time to learn your craft and to become excellent at it, right? And if you really dedicate yourself to your career and your business, you learn every day and you grow from mistakes and things that have happened on previous transactions or different interactions you've had with clients, realtors, escrow officers, et cetera, right? And so I think that in an ever-changing environment, it keeps you on your toes, but mentally, of course, I'm super confident now and feel great every day when I wake up. I mean, I know exactly what I need to do on every transaction. And if I don't, I have a great team that supports me to help navigate a situation. And I've been able to build an amazing team because I built my business up from just kind of being an individual loan officer to having a group of people and a few assistants and things like that. And so those are all things that help you mentally become more clear and have more of a laser focus. Having support staff and having people support you as a successful loan officer is really, really key in this industry. There's so many cooks in the kitchen in our industry in general, right? It's like when you think about all the people that touch a transaction, somebody's always going to try to spoil the broth, right?
Oh, yeah.
It really can be that way. And so having that solidified team from appraisers to assistants to escrow companies, etc., it really makes such a difference and allows me to focus more on the client. And what I'm good at is structuring the transaction. And as you grow as a loan officer in the business and you learn every year that goes by, you get better and better at putting the deals together and figuring out why this or why that, or why you should go here, or why you should go there, and what investor is going to do what, and who's going to get it done fastest and easiest. And there's so many different things that are involved in all of that. So, the confidence level, of course, grows as you grow in your career with any career, but it's a fun business. And I would tell anybody who wants to get into it or be involved in the mortgage side of things, it's a great business. You just really have to know that it is a very full business and there's lots of commitment involved with it because you're responsible for people getting their homes.
Right. Well, just like as a realtor, real estate agent, it's an oversaturated market and not a lot of inventory, especially now. Oh. I would think, in your business, there's probably quite a few you as well, right? And it's
you can throw a rock, I think, and hit a realtor or a loan officer in Southern California or maybe any big market. But the cream rises to the top. I've realized that over the years and working in kind of a micro community of, Irvine, Newport, and, really kind of focusing and have a lot of clients in these areas, you really get to know who's great at their job and who's not.
Well, let me add on that. Not only great, solid at your job, but then also a lady or man of your word, which is hard to come by nowadays. There's a lot of great realtors and loan officers out there, but people that are listening to this, one of the reasons I have Kristin on as well is she's such a genuine person and I trust her.
Thank you.
And there's a lot of people I don't trust, and for numerous reasons. And you have stayed consistent in almost the 10 years I've known you, which is key. And so obviously I wish I could refer more business to you, but I would, and some things just didn't work out, but I have no problem referring someone to you because I totally trust that you're going to get it done properly and not mess things up. Because the last thing you want to hear now, part of that though, is on the buy side, the buyer's got to have his and her stuff together, right? Before
let me touch on that,
so
Mike.
If you want to touch on that.
Yeah, I actually feel pretty passionate about this subject right now because of everything we previously discussed and the competitive nature of the market. Mm-hmm. And, I feel like the real estate partners that I work with and that are referring business, we've kind of like trained each other over the years. Like, this is how you connect a client. This is how you do an introduction. This is what the most successful way is, and et cetera, et cetera. But, in the last year, 6 months, really, we started turning the word pre-approval into an approval. And when any buyers that are listening to this, or you're trying to buy a piece of real estate, you kind of got to toss that word out the window. And I feel like I've had to educate people over and over again on this topic. It's very important. A pre-approval is kind of a half way of looking at somebody's financial picture. It's not a fully underwritten loan. And in the competitive nature that our business is in right now and trying to get a property, if you can't offer to close in 21 days, if you can't remove your appraisal, your loan contingency in 10, it's going to be much more difficult for you to rise to the top of that, 10 or 12 or 15 offers that are on the table. So if you're a buyer, talk to your loan officer and say, I don't want just a pre-approval. I want a full loan approval. And when you write the letter for me, I want it to say that I'm fully approved and that you can meet these types of timelines. Anybody that says they can't close, they have to close in 30 days, you might as well not bother, in my opinion. That's a much more difficult offer to be accepted, depending on the price point of the property, right? But it is very, very key. And so I've had to educate the referral partners I work with to start using that word, and also to get it in the mindset of the client or the buyer. Say, hey, you know what? When you talk to your lender, when you talk to Kristin, make sure they're getting you a full approval done, because if we don't have that, we're not going to be able to be as competitive and put you in the best light and say, I'm presenting your offer, right? And so that's just something I've had to educate people on, and I feel really passionate about that when I'm talking to clients. I think it makes a huge difference. I feel like that, if anything, that's allowed us to be more successful in certain situations.
Absolutely spot on. Everyone that I've had an opportunity to work with on the buy side, I tell them pre-approval really doesn't mean too much nowadays. You want to win, get fully approved, get everything set up, ready to go, and be able to show financials and documentation, and be able, like you said, be able to close quickly. If you can stretch it out, great, but at least offer all the lures, the shininess of yourself, the attractiveness to that seller, so you can win out. Pre-approval. But then again, I've also been a homeowner, and my wife and I have purchased 4 homes of ourselves and refied several times, and done HELOCs and all that stuff. So I walk the talk, and I think that's important on the realtor side too. Is you got to walk the talk.
Yeah.
Right? No, absolutely. And I'm nothing special, but at least I have that experience just to fully appreciate, get approved 100%. So you're spot on. Absolutely. 100%.
Yeah, that is key. I wanted to emphasize that because I do feel passionate about that. It's like, I know how painful it is for these clients to keep submitting offers and not getting it accepted. And sometimes that happens and they come to me and we do a full approval and we get it done, and their 21-day close gets them the deal, right? So this is just really an important thing to keep in mind. If you're a buyer listening to this, go through the process and do the hard work up front.
Hey, when you have multi-million-dollar properties that are closing on average in 28 days,
yes,
you better have your ducks in a row, as they say. And you better be able to crush things fast and be uber competitive and just steamroll people. And as brutal as that may seem, that's how it's been.
That's right.
Right? Otherwise, you're gonna get steamrolled.
It's very true. Unless you have a checkbook and you can write a check and pay cash, you've got to do everything we just talked about.
And the average amount of people that can truly afford on their own a home in coastal Orange County or Orange County in general is what, 23% in the 20s?
Right.
So you're spot on with that, so we're looking at loans and possibly help from other people. So they just touched upon something, or maybe I did. So I take it you have quite a bit of experience of maybe bringing in family members to help facilitate the deal.
Yep.
Mm-hmm.
Very common. There, in Southern California, especially, or in a lot of other metropolitan areas, there are people out there who just, are younger. They have great jobs. They make great money, but maybe they haven't been able to save a big down payment, and mom and dad or uncle or whoever is able to assist them with some gift funds. That's a very common way people can get their homes now and have a little help from, somebody in their family. Also, there's instances where people will help co-sign for their daughter, son, niece, nephew type of thing. So those are all very common things that happen.
Right. Before I forget, so obviously you're still doing refis. Have you, it may be below your level of stuff, but do you have clients that call you up and say, hey, I need a HELOC or business equity line of credit? Do you do any of those?
I typically refer the lines of credit out to a friend of mine. It's just not something I feel like we're as competitive with, and I don't want to work on a product we're not as competitive, completing for somebody.
Fair enough.
Yeah. But yes, clients call all the time. Some of my clients will do financing at 80% loan to value, on their purchase transaction. And then they say, when after we're closed, we want to remodel, we want to do some stuff. Is there any way you can get us a line of credit so we can, fix up the kitchen or whatever? And so then I'll often refer them to a friend of mine. They can get to 90% with a line of credit. And then they have a little extra money to, fix up, remodel, buy furniture, do whatever they need to do.
Right. Okay. And yeah, there's like us that have been in the home for 18 years, and we're doing a lot of upkeep now. So,
a lot of remodeling. And
oh yeah, all new hardwood floors and new furnaces and AC units and new roof. It's a lot. It adds up.
Yeah, it does. It's very
you're like, oh my gosh, and you don't want to tap into your kids' Section 529 plan for college and ruin their college savings. So, look, things could be a lot worse. And for those that are going through tough times, I totally have been there. If you knew my first deal, of buying a home, oh my gosh. So, but anyways.
You'll have to do it once at the beginning. And then once you're past that first real estate transaction, things do get easier, I think.
Well, imagine buying your first house and the guy committed fraud who sold it to you.
Oh no.
And and the whole foundation was raising and sinking.
Oh my gosh.
This was 1997 when we had that El Nino year.
Oh no.
And so then we had historic rain and the roof was leaking everywhere and blowing out the walls. And then
my God.
And then on top of that, we had mold, and we just had our first baby boy. I have 3 sons, but my first son. So just having a kid alone can tax a marriage, but sure. We had all that going on. I just started a business. My wife just started her business, which is now 30 years later. But you want to talk about a difficult time? Oh my gosh!
That sounds awful.
Yeah, it was brutal, and going into debt big time for attorney fees and structural engineers, geological engineer. I learned more that year. I wasn't even in the real estate business. I learned more that year, which is valuable now as a realtor than most realtors will ever go through. That was brutal. And I never want anyone that works with me to go through something like that.
So look at you came out the other end. So things can happen along the way.
Yeah. I remember. Yeah. Well, it was like a fist fight. The guy broke my nose. I put him in the hospital. So you want, hey, you want to be, well, because the people be like, they get mad when they hear about it. And they're like, oh my God, that guy screwed you over so bad. I'm like, hey, dude. Yeah, I broke my nose, but I got back up on my feet and I took him out. It just took a while. So,
wow, Mike.
Sorry, folks. I use my martial art analogy, but if you ever get your butt kicked financially or legally, you got to pick yourself back up and rock it. So, at least my opinion.
Exactly.
I don't know. Sorry, we went off on a tangent on that, but it's just going into experience as life skills, life experience, and you have that. So, another reason why you're on. So. Now that we're going into 2022, we've had this pandemic for several years. By the way, how did the COVID thing affect you? How did the pandemic affect you?
Well, I thought in March of 2020, I thought to myself, I don't think that anybody's going to be buying houses. I don't think anybody's going to be doing anything. Let's turn off all the auto pays. Let's not spend any money, right? Oh boy, was I wrong. The market obviously got lit on fire. So that part was awesome. And there's obviously been a huge demand for people buying homes, and rates have been great. And those things have all been awesome. But COVID has also caused lending to get a little more strict in certain areas.
Mm-hmm.
And there's been COVID guidelines to make sure that people are really still solvent, able to continue to make their payments. And some of those things have been frustrating for borrowers and whatnot. It's really has limited certain aspects of pieces of the loan transaction, but we've worked our way through it, and some of those things have started falling off, and that's getting a little bit better. But some areas and some markets, you can't even find an appraiser to go appraise a home for 2 or 3 weeks. Seriously, I mean,
wow.
Unless you're offering to pay double or triple for an appraisal, Austin is one of those markets. I had a deal there, and man, we had to basically just tell the guy, we'll pay you 3 times as much. Can you get out to the house? Because they had to close the deal.
That's ridiculous.
It's ridiculous. Yeah.
That's ridiculous.
That's not good. So there's things like that have happened. But overall, I think that's all kind of getting a little bit better now. The certain areas like Austin or Dallas or whatever, they've beefed up the number of people that are able to do these types of things. And some of the COVID guidelines have fallen off, and things seem to be a little more normal now.
Mm-hmm. Well, what a good experience you have from the market kicking butt in the late 90s, early to mid 2000s, and you experienced the 2000 crash, right? And from the adverse underwriting, the perfect storm, as they say, with everything as well. Now, it's not, we don't have that now, and then you see the complete opposite swing of super stronger underwriting guidelines, right? And as you just touched upon. So, and now, yeah, right. It does seem like, I remember when COVID hit, I remember people going, oh my God, we're in escrow for at least 45 days. It's looking like almost 80 days because of this whole loan issue and the underwriters and this and that and the appraisal. And now it's a jumbo loan and we got drive-by appraisal. That's 2 appraisers, exactly.
Yeah. No, a lot of weird things happen. But interestingly enough, with all of the kind of additional COVID restrictions, in the last 6-8 months, there's also been a lot of great, interesting products that have come to the forefront outside of the traditional, what we call cookie cutter A paper type of loans. Like I mentioned earlier, some bank statement programs that have become even more aggressively priced. When you have good credit and can put 20% down and you need to use bank statements to qualify, those rates are still in the 3s and really great products available. Or even clients that want to do or go buy investment property, there's some great, awesome investment property loans. If they are investors and have had past experience, they don't even need to qualify with any documentation other than an appraisal, a rent schedule, and a good credit score. Obviously some assets, of course, but there's a lot of different types of flexible, interesting programs that have come out and become very aggressively priced on the rate side of things, where before there was some of that stuff starting to happen, but the rates were pretty high. And so that's really been moving in the positive direction. And I think it's allowed additional buyers to come into the market for various reasons, and having those products open and accessible to them.
Nice.
Yeah.
And may some of those products, I know you mentioned the LTV and the 20% and all that. And what about, let's say you get that client that is producing well, but plays the tax game and brings everything pared down to show less income at the end of the day for less taxes to be paid output. And maybe their credit's not exactly, in the 8s, high 7s. So are you guys able to still, obviously there's several factors involved, but are you guys able to possibly entertain helping somebody? And I'm not talking about myself, by the way.
Let's just say somebody has a couple issues on their credit and they have a, let's just call a 680 FICO score. I was just looking at that for somebody a short time ago, and those rates are going to be in the high 4s and low 5s if they're qualifying on bank statements, and they don't have great credit. So that's where it kind of gets a little higher on the interest rate, but there's interest only options that are available on a fixed terms for 40 years. So it protects people and you don't have to get into some kind of funky ARM program, but also there's availability after a year to refinance those, maybe once they clean up their credit score a little bit, and kind of move into even maybe still a bank statement loan, but into a bank statement loan with a better FICO score, which then would get them in the high 3 range. And those are all portfolio products, and they're not so driven off of what happens with the bond market. And they don't reprice every single day like the traditional A paper stuff does. So those rates, even with the rate fluctuations on the traditional products in the last 30 days, those rates really haven't moved much at all, if at all. So, so that's a good thing to know. Even if in an increasing rate environment, those probably won't move a whole heck of a lot.
Good. Awesome. Yeah. All right. Well, if people would like to get a hold of you, whether they're a buyer listening on here and they live in one of those states that qualify, or a realtor would like to get a hold of you, how can they do that? You care to
give me a call, shoot me a text. My phone number is 949-350-7396. Or you can email me. My email is K, like my name, Kristin, and then Breen, Breen, at Arbor, F like Frank, G like good.com, kbreen at arborfg.com. Feel free to shoot me a text, call, phone call, whatever. I'm usually always available on my iPhone, so ready to answer your questions.
Right. And how's your parents? How are your parents? How's your mom? I was going to say, how's your mom? And I better include dad too. So they're good.
Mom, Joanne, was over here this morning, and and she visits often. I'm an only child, so Mom and I are real tight, and Dad's doing great. And no, they're wonderful. My mom used to work with me for many years, and she doesn't now, but she still gets to hear all about it and what's happening, and she still, I think, knows a lot about the business. And she's like, well, wait, what about this? I'm like, oh, that's great, Mom, good idea.
Oh, cool. Very cool. Let me rewind a quick thing. Was your mom in the business before you got in? Okay.
No, she wasn't. My mom was a stay-at-home mom, and then she had a background in being a paralegal, and so she was a paralegal, a little bit later. But no, I recruited her into the business. When I got too busy, I said, "Oh my gosh, Mom, you gotta come on. Let's train you. I need an assistant. Let's do this thing." And of course, she was happy and willing to do it. But she has since retired in the last 4 or 5 years, and I think she's happy.
Yeah, well, God bless her. Joanne, way to go. Congratulations on retirement. And your dad is, as well. So, outstanding. So, Kristin, thank you so much for your time. I know you're pressed for time. I appreciate it. And again, you guys,
it's been fun.
You're welcome. And again, everyone, if you need to possibly get a loan or a combination cash loan, whatever, give her a call. She's amazing. So, thanks again, Kristin. Have a great day.
You too.
Thank you.
Bye-bye.
Bye.